2025 is the year of radical change, the best time to get rid of the old toxic habits, the degenerate gambler mindset when it comes to trading. I want to give you a handful of names, strong fundamental companies that I believe are going to supercharge your portfolio, send you in the right direction. Now, the first company is Robinhood. We gave this out 1674, ran over 165% from the first week in August, breaking all of my upside targets. And I believe next is poised to crack all-time highs at $85. If you look at the income statement on the quarterly, I'm looking at each individual quarter and I want to focus on revenue. Q1 of 2022, they did 305 million. Q1 of 23, 447. Q1 of 24, 624 million. And last quarter, $643 million. The second thing is the gross margins here. Very impressive. In the past 3 quarters, over 90%. Last quarter, 81%. Means it doesn't cost a lot to generate this money. So that's a very good sign. We know brokers are always going to take advantage of fees. They thrive during peak market times. They've just added futures market, betting markets, all of the above when it comes to crypto now. That's going to drive their customer base, generate more fees, and again, hopefully create more revenue. Now, more importantly, what I like to focus on is the net income. What are they taking home after taxes? And when we go back, we saw minus 392 million, minus 166, minus 85. And now, again, they are profitable. So they were losing hundreds of millions each quarter. And now the first 3 quarters here, we see they're profitable 157, 188 in the last quarter, profitable 150 million. So this is huge that they're plus, let's say 4 to 500 million versus minus 4 to 500 million, which we saw again 2 years ago. Last is earnings per share. We see it's now positive EPS versus negative EPS. And that's even more important when they first went public, which was at the peak, I believe, of the last crypto cycle in 2021. Their EPS was like minus $2. Now, again, it's positive. The last fundamental component would just be the balance sheets. We want to just go over what their cash and short-term investments are. This is essentially liquid cash, $4.6 billion in cash. And then the only other metric that I really like to follow here is the long-term debt. No long-term debt, no long-term liabilities on the books, which is fantastic. Analysts are going to love that. Institutions are going to be all over it. Taking us into the next point here. When you look at the biggest whales, the largest global institutions, what are you noticing? They're adding massive size to Robinhood. Vanguard just added 7.6 million, BlackRock 3 million, Newlands managed over 2.8 million, JP Morgan almost 3 million shares. This is a lot. This is a large ownership percentage in the company. Now, I want to focus on the analyst upgrades. We're seeing some of the biggest names on the street: Morgan, Barclays, Goldman, Deutsche Bank, Citigroup, just to name a few. Very nice price targets, mid to low 40s, also in the 50s, and also that the time period is gradual. Over the past 6 to 9 months, more players are coming to the table, realizing that Robinhood is going to be a monster going into 2025. Now, the next stock here is Coinbase. I think it's definitely something that you want to keep on your radar going into this year. Brian Armstrong is buddy-buddy with this administration. He's met with Trump already. He's going to be at the crypto ball on Friday. Coinbase is also sponsoring this event. So to say that they're not going to be a dominant player or a household name is very silly. And I think without a doubt, when you look at their active monthly users, it's number one across the board. I mean, they're onboarding tens of millions of users. Their goal is 1 billion this cycle. Obviously, if they achieve just 10% of that at 100 million is going to be massive. So really what we're seeing here is sort of this inverted head and shoulders playing out. If you want to see, this is sort of the left shoulder, the head, the right shoulder. On the macro, looks really great. It broke out of this trend line, has now used it as a floor. I think without a doubt, Coinbase is primed to go nuclear, specifically going to the net income. When we look back 2, 3 years ago, same thing. They were burning 500 million, a billion each quarter. Now they're being profitable each quarter. We see the same thing with the earnings per share, -2, -$4. Now they're positive, which is a great sign. And again, more importantly, going to the holders, right? We're seeing the biggest players in the game: Vanguard, BlackRock, FMR, ARK Investments, Jane Street, Morgan Stanley. Massive size. in Coinbase's platform. And really, they started accumulating at the lows. So when you started seeing BlackRock take a stake, that was at 30, 40, $50. So everyone was buying the dip very aggressively here. Sure, they're extremely profitable. With Coinbase, essentially, they're an exchange monopoly. They host 10 out of the 11 Bitcoin ETFs, 8 out of the 9 Ethereum ETFs. BlackRock, the largest global publicly traded hedge fund, has all their money, all of their crypto invested with them. Again, the same exact company that is very tight with this upcoming administration. No doubt is going to be poised to be a dominant player in the game. Really, the writing's on the walls. I can't say it any more than that. Coinbase, definitely a name you must keep on your radar, again, going into 2025. Last but certainly not least is TeraWulf. I think no doubt this is a 2 to 3x for this cycle. Should be a $15 to $20 stock, conservatively a $10 to $12 stock if you want to really be conservative. I think in terms of the power that this company generates, the value of the business should be anywhere between $6 to $8 billion just based off of them owning their own assets and having a fixed energy cost. If you look at Microsoft, they just invested $80 billion into data centers. That is what's most valuable. In fact, that Wolf is nuclear, 93% carbon free. Definitely going to be something that is highly, highly valuable over the next few years. We see all of these major tech and chip companies. Elon Musk said it. If you're not a large cap, mega cap, putting at least $10 billion a year into data centers, you're behind the curve. So every company is trying to, again, be ahead. They're putting crazy amounts of dollars into it. And I think that just in terms of the mining aspect, which is their sector pretty much, they're profitable per coin. They have a very low cost per coin and very different. I would say night and day compared to something like Mara and Riot. I don't know why they have the top two names. It's like the AMC and GameStop of the sector. It's just the community favorite. But in terms of the actual fundamentals, those companies are garbage, most likely going to zero. They're not profitable. They don't own their assets. They don't have a fixed energy cost. The best part about Wolf is that it thrives during down Bitcoin times, unlike the competition. So it's not something I'm fearful of if we go through, a bear market. It's not something that I'm going to worry about the company losing 90% of its value. It's got strong backing and definitely something that you must keep on your radar. But I do believe the cap structure was tighter, that the stock probably would be trading 10 to 12 plus right now. The OS is about 385. It's not that bad, but compared to where it was, say a year and a half, 2 years ago, I mean, it's really night and day. I mean, the company would be trading definitely at multiples if it was lower, considering it has a 2 billion valuation. But either way, they're cash flow positive, lots of cash on the book, which is great. They're debt free. When you look at the holders, lots of institutional ownership, massive, massive size across the board. These are your biggest names in the game. So it's not something, again, you want to sleep on. I'm giving you three solid fundamental companies. These are not garbage penny stocks going to zero. These are strong businesses that are going to improve. Definitely a name, must be top on your radar. I'm not telling you to buy or sell. It's not financial advice or anything like that. I gave TeraWulf out at 60 cents when nobody wanted to own it. That's something people fail to mention. The stock already did a 10x or it did 1000%, and I'm still recommending it now. What does that tell you about the company? Okay, again, the writing is on the wall for a handful of names. You can't just say that for any stock and then it just hope it becomes a reality. Cross your fingers and pray. This is a real business. It's simple as that. It's unlike the competition. It's very rare for you to see this type of institutional presence for the real reason and why the company is valued. Not because, institutions are just naturally buying every company in the sector. That's normal. They're going to lend the stock. They're going to borrow it. They're going to short it. They're going to play it up and down. Sure. But at the end of the day, this is a stock that they're going to want to own long term versus just taking advantage of the time or the sentiment in the market, which is why I believe you're seeing all the volume and the inflow just across the sector for the miners. So that's my take. Those are my top three stocks. Let me know in the comment section below if you appreciate breakdowns like this. You should definitely expect more videos, more volume on my post. I'm going to love to collaborate with a bunch of new traders this year on space calls. So if you're someone that's looking to get in contact with me, you could reach me info@avidcapital.co. Again, definitely stick with me. Promise I'm not going to let you down. So again, if you're rocking with me, let me know the energy in the section below. Have a fantastic night. And as always, we'll see you in the next one.